What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a look over here at the Bitcoin price chart as the price has cleared through all retracement levels over here, much stronger than I anticipated it to be. And in today's video, we're going to talk about the location of where Bitcoin is, the location of where the total market cap of all of crypto is, and the location of the total altcoin market cap, and how these have been very similar to things we have seen in the past. For example, when Bitcoin got back through all the retracement levels back in 2020 here in November, that is also the exact time the total market cap got back to the 702 Fibonacci retracement level, just as it is right now. Also, when Bitcoin got back to this level in November of 2020, the altcoin market was battling here underneath the 50% retracement level, but above the 382, which also happens to be where the altcoin market cap is right now. So right now, we have the altcoin market, the total market, and Bitcoin all at the same locations as they were in 2020 for both Bitcoin, the total market cap, and the altcoin market cap at the deciding point, at the decision point before Bitcoin broke into its all-time high, the total market cap crypto cleared through the 702 retracement, and the altcoin market went on an epic run. But as we sit here right now, there are a few things that have me scratching my head that I want to share with you. We'll need to talk about Bitcoin, the altcoin market, the stock market, gold, the Fed funds rate, and even the reverse repo facility. As we all sit here now waiting to see, will this thing actually blast out like it did back in 2020? And outside of looking at just, hey, we're at the exact same places as we were, do we also have all the exact same conditions lining up as we did back then? Now, in this video, I am going to end up taking out a lot of the fun of Bitcoin, a lot of the narratives, a lot of the romance and stories when it comes to things like the block reward halving and when it comes to things of it being its own asset, not correlated to anything. We're going to show those extreme correlations that happen, and we are actually going to dismantle the block reward halving. It is of no surprise that the price could do this prior to the block reward halving because historically the block reward halving actually doesn't matter. And we'll talk about that, but we'll pay attention to things that have actually historically been important. I write a newsletter over here on Substack at blockchainbacker.substack.com, and I just released a newsletter yesterday talking about Bitcoin's euphoric ascent in an absence of breadth. It's rare that I actually show the contents of the newsletter here on the YouTube videos, but I actually am going to show a lot of this stuff in here and to show you exactly what I'm talking about with the correlation of Bitcoin to the stock market and this just giant glaring missing element. And the question now remains of whether or not Bitcoin is giving signal of that element is going to arrive, or is there some trickery at play? First of all, let's just talk about the timing of where we're at with Bitcoin, where we're at with the altcoin market, and how we're doing. One, is it appropriate to even be doing this and getting back to the all-time high based on time, right? Block reward halving theory suggests that we shouldn't be doing something like this until after the halving. During all the negative price action, we went through it all of 2022 and 2023 to say it is clearly evident the top of the market is not here. While the price goes a little higher here in Bitcoin, we don't see that throughout the rest of the market. And all indicators suggest that the peak of the market actually was when Coinbase IPO'd. We've talked about that tremendously. If I flip us over to the monthly time frame and I take the price candles off the screen and we just look down here to say where were peaks of the markets, you would say, hey, here is the technical peak of the market. You could see this is where everything falls off of a cliff. You could see this is where everything falls off of a cliff. The weakness of the market emerged there. And then when we go look at the actual price chart, we could see the peak of the market is back here in April of 2021. So is it inappropriate for price to be at this location this deep into it? Nope, it seems okay. You can also see that in things represented here like Dogecoin when you look back to how long that 2018 bear was in there and how long it's been in there and here. These times are not too far off from each other of how long these things went on for. Again, this also reiterates the peak back in April and in May, and that you're approaching an appropriate amount of time. You can see that evident over here in Litecoin as well, where the peak comes in, where you're at. you're at enough time for things to start getting moving here in the cryptocurrency market. So I don't find price action to be occurring here to actually not be odd that it's happening before the block reward halving, because we've spent a tremendous amount of time trying to disprove it. I've even written a long thread about this over there on Twitter back in May of last year. So 10 months ago, saying that the Bitcoin block reward halving is an urban myth of the cause of price action. So even if you actually just believe in timed cycles, it's actually not really off. But the question comes to all the other elements exist for us to actually be able to escape and for things to get exciting. We know that these market caps have gotten back to these same levels. Altcoin market cap gotten back to the exact same level. It was this moment, it was being able to break from this moment in time that actually was sending everything catapulting with big percentages. So I think to myself, can I look around and see evidence suggesting that we're right on that moment? And that's where we get into this thing and how important that is. And that the price action that we're seeing right now, it just solidifies the proof. The block reward halving has never been the catalyst. And right now, I'm going to show you evidence. It's been the stock market. But there's a few major indexes we need to know about with the United States stock market. And that's going to be the Dow Jones Industrial Average, which we pull up here on the channel all the time. That consists of 30 large companies, and you're probably very familiar with a lot of them, such as Microsoft, Goldman Sachs, Home Depot, McDonald's, Visa, Boeing, Nike, Amazon, Coca-Cola, Walmart, etc. You're likely very familiar with nearly all of the companies in the Dow Jones Industrial Average, which is 30. Then you're going to have the Standard & Poor's, which is the S&P 500, which is 500 large cap companies. The NASDAQ, which was 3,700 companies of all different sizes. But then you have the Russell 2000, which is 2,000 small cap companies. And you're probably not going to be familiar with a significant percentage of the companies that are the small caps in there, such as like Stoke Therapeutics or Red River Bank Shares or Zumiez or Limoniera, Full House Resorts, right? Generation Bio. But what we're going to talk about is expansion happening throughout the United States stock market and how that has been correlated to Bitcoin's price action. And when there hasn't been expansion, what happened to Bitcoin's price action? So to understand what I mean by expansion, I'm talking about the whole market running together. Large caps, mid caps, small caps, all caps. Everybody's going on a bull run. That is where the breadth of a market opens up. Everything rocks and rolls, and it's a good time. That's where you have the Dow Jones, the 30 big caps, and then the Russell 2000, the 2000 small caps. Everybody's going. It's a party. Let's rock. Like we did right here after the great financial crisis, where they both break out from each other 60 days apart from each other. Another example of expansion is like with Bitcoin and the altcoin market. Bitcoin gets through its all-time high, the whole market expands with it. When this occurred back in 2013, believe it or not, that's the start of the 2013 bull run. Stock market expands. Bitcoin, after spending nearly 2 years in a bear market, of 2011, 2012, and there we go to start 2013. It breaks through its all-time high as the stock market is expanding. Again, it's important to remember these events actually happen 60 days apart from each other, where the Russell breaks out and the Dow Jones breaks out. 60 days is how long it took. Because what's also interesting is that when we move over to 2016, when the Dow Jones broke out and went into its big bull run of 2017, the Russell 2000, the small caps of the market, also broke out and went with it. And what's amazing about it is they happen on the exact same day. So the whole market is expanding. It's not just the top 30 market caps that are running, it's the whole market running together. Sure enough, what does Bitcoin do? Spends years in a bear market. It escapes from the bear market as the expansion is going on throughout the United States stock market, and off and away Bitcoin goes into the 2017 famous bull run. The story was also exactly the same over here in 2020. We saw expansion occurring at the exact same time, with the Dow Jones Industrial Average taking off, the breadth of the market opening up, all the small caps running with it, and the Russell 2000 takes off and soars with it. Again, it happens on the exact same day. Boom, off and away it goes. What happens to Bitcoin? There we go. We break from a multi-year bear market. We escape with it too during an expansion. What I have just shown you is that the 2013, 2017, and 2021 bull runs for Bitcoin were all correlated to expansion in the stock market. Definitely not block reward halvings. But one thing to take note of is back in 2019, the Dow Jones Industrial Average actually did set a new all-time high. This is before COVID happened. And what you'll notice here is that the Russell 2000 did not follow and expand into new highs like the Dow Jones did. Remember 2013, where it takes 60 days? 2016, where it happens on the same day? 2020, where it happens on the same day? For some reason, the Russell 2000 did not follow along. It was unable to take out its previous all-time high, and nearly 100 days elapsed here with the Dow Jones just hovering up in here, with the Russell unable to get through. It did not follow because the market wasn't truly expanding. It wasn't a real bull run. And at that time, Bitcoin didn't fall for it either. Bitcoin stayed down and depressed and sad, never able to escape. So I ask myself, well, we have Bitcoin all the way back up here. We've got all these market caps doing what they did before the 2020 bull run took off. It's like, hey, are we looking like we were back in 2020 with the US stock market, where the Dow's back at its high trying to break out, the Russell is trying to break out? We like back in 2016 where the Dow is breaking out and expansion is happening and the breadth of the market is opening up to small and mid caps, and the Russell is breaking out to send Bitcoin euphoric? Or is it like 2013 where the Russell's leading the way and the expansion has already started and small caps are just rocking and rolling, which has been the case for the 2013, 2017, and 2021 bull runs, is that the timing of Bitcoin's breakouts have been correlated to expansions in the stock market. People love to say Bitcoin's not correlated to the stock market because we can look at the days of the action in here. We're not acting exactly on cue with every single day, but there's no question of this correlation happening in here, that when there is an expansion happening throughout the United States stock market, Bitcoin either goes with it or can call its bluff and doesn't expand with it because it's not expanding. And so the most curious thing to me is, are we expanding? If the stock market is expanding, let's go. The problem is it's not even close. It's the worst breadth of a market that we've ever seen, where the market is extremely consolidated into just a few assets that are holding up the whole stock market. It's more than a few, but from a percentage standpoint of how many they are, it's all the big names we keep hearing about. But when we look at the small caps of the market, there's something fundamentally happening here where there's not an expansion happening in the market. An example of that is like back in 2021, where Bitcoin goes and sets a new high in November with Ethereum and Solana. But like we showed, 90% of the market all topped back here in April and in May, where the technical top was. Assets were consolidating in the cryptocurrency market in November of 2021 rather than expanding throughout the whole market. As we know, that's also the same condition that we have here in the United States stock market, where the big cap, the Dow Jones, the NASDAQ, they're all up here at these 4.236 extensions. Yet we have this breadth situation where most of the stock market topped back in here in late 2021, which is similar to like what we saw back in 2019. What was also similar to 2019, which was different from 2013, 2017, and 2020, is that we were not in a restrictive monetary policy environment. When the 2013 breakout happened, rates were at zero. QE era. When the 2016 breakout happened, rates were at 0.25%. When we had the breakout of 2020, rates were at zero. However, in this one, where the Russell did not follow along, we were coming off of a hiking cycle going into cutting, and everything collapsed. So here we are after a hiking cycle. We're paused. The Dow's up. NASDAQ's up, but like 2019 and 20, the Russell is not following along and expanding like it did in 2013, 2016, and 17, where it's on the same day, or 2020, where again, it's on the same day. Like I showed earlier, the longest gap between the Dow and the Russell being able to expand and the breadth opening up was 60 days. And even in that environment, the Russell went 60 days before the Dow. We're now like 80 days later, and the Russell is still nowhere close, right? But I think one of the biggest takeaways to see here is how these multi-year bears for Bitcoin play out, and how those breakouts, those true expansions of the market, all occur when there's expansion and breadth opening over there in the United States stock market at the exact same time, I talk about it how it's unequivocal, it's non-debatable, it's not an opinion piece. The block reward halving is an opinion piece because the data is so inconsistent. It's up for people to have an opinion, that's fine, but this isn't opinionated. This is unequivocal data. You can't argue it. It just happens. The market expands, Bitcoin goes. The market expands, Bitcoin goes. The market expands, Bitcoin goes. The one time where this market didn't expand, Bitcoin didn't go. So what is the thing we need? We essentially need to see alt season happen in the United States stock market and for the breadth to open up throughout the United States stock market. Fortunate thing for it also is Wyckoff accumulation. The structure it has is more of the spring phase of Wyckoff accumulation happening in here. Again, the sign of strength phase that has shown up in there. Right on top. That's really what you look for sign of strength phase happening in there. But we desperately need to see it if we want to have any level of confidence that this is good because it was good before, and that this is good because it was good before. The conditions that were existing in there were expansions, just like we've seen in the past bull runs. Next, we're actually going to talk about gold. In my previous newsletter, I talked about the great market convergence with Bitcoin, stocks, and gold, and how gold has even given us a signal throughout history and in the last 15 years. And if gold closes where it's going to close today, it's going to close its highest daily and weekly candles in history. Now, the interesting thing about gold is when we do have those periods of expansion in the market where the Russell is running and the Dow is running, gold typically is very weak and it breaks down during those moments. As we can see here back in 2013, during the 2013 bull run for crypto and the stock market, gold gets wrecked. At the time, the federal funds rate was sitting there at 0. However, when there was that rally that happened there for the Dow Jones Industrial Average prior to the great financial crisis, gold didn't get wrecked in that breakout. It wasn't worried about it. And at that time, the federal funds rate had been paused, and we actually had just finished a hiking cycle when the Dow broke out into its new all-time high. The Fed starts cutting, the Dow tops, gold breaks out and goes. It marks the top of the stock market. The little rally that we just talked about in 2019 where the Russell didn't follow along with it, we had just gotten done with a hiking cycle here for the federal funds rate. We were setting this new high in the Dow. The Russell was not following. The Russell was not expanding. And gold had been climbing its way up and did not get wrecked during this breakout and actually called the bluff. The top comes in. Gold breaks up the second that top comes in, which we can see more closely right in here. Then you move over to 2020, where we saw the expansion happen in the Dow Jones Industrial Average. The expansion happened in the Russell 2000. Gold is getting hammered during that expansionary period that's happening there while we're on a 0 Fed funds rate. Even that 2016 breakout where the Russell and the Dow break out on the exact same day. Look at this. Gold gets pummeled during that breakout that happens for the stock market. In that time, the Fed funds rate was sitting just off of 0. As you can see, stock market rips, gold stays in its bear market. Yet here we are with gold up near the all-time highs, not breaking down from this Dow Jones Industrial Average breaking to a new all-time high, while the Russell 2000 is still lagging way behind. Gold is not getting crushed as if we were in an expansion like we've seen in 2013, 2016, and 2020, all the years of when the Bitcoin bull run started and when the equity bull run started. Gold is still holding up very strong, just as it has done with each hiking cycle before we move into a cutting cycle, which is far different than what happens during expansionary periods. So what is so fascinating about this particular moment in time is we have these elements in the crypto market of exactly what they looked like before the big epic rally that lasts a couple of months and everything goes euphoric. And we're even really just kind of right on time for that to be happening. And even the altcoin market is doing that. But the most bizarre things that exist out there is that the times that we have done it have been in near 0 rate environments where it's credit creation galore, not a restrictive environment like we have right now. We also don't have gold breaking down as we should in an expansionary period, as gold threatens to break out just like it did after each prior hiking cycle where gold goes roaring during cuts in loosening financial conditions. That there's no breakdown happening here in this environment, and there's no opening of breadth or expansion in the United States stock market which has been the case for every Bitcoin bull run, whether we look at 2020, 2016, and 2017, or even 2013. For all three major bull runs, you have an entirely different financial condition. Gold is acting entirely different, and equity markets are acting entirely different than every bull run in history for Bitcoin. So it begs the big question of, is Bitcoin a leading indicator for what's about to happen with the rest of the markets? Or are the rest of the markets giving us a sign of something else? The most common thing we all do is we like to say, this time is different. And we attach ourselves to whatever narrative we actually end up having. Look at every bottom, look at every top. There's some type of narrative to go with it to say this time is different. And so the thing that I'll be cheering for, in somehow, some way, some type of magical unicorn fairy dust, that we do actually have Wyckoff accumulation over here in the Russell 2000, and that we do actually see expansion happen in markets. And this is not such a narrowly defined rise in markets, but becomes more spread out. Because like I said, it's unequivocal. It's been mandatory in every bull run for Bitcoin, whether it's 2021, 2017, or 2013. It's all right on time. It's all with an expansion. It's all with an opening of breadth. And right now, we're knocking on the door of that answer getting told to us, as every single one of these things are precisely where they should be at that major resistance level that actually ended up being the breakouts to send the thing catapulting. But we have to get through there first. And you would think that some of these conditions have to open themselves up first. So it's kind of like we're at like this really critical level. When we were at this level in 2020, this was the major resistance. This was the major breakout level. So while we still have a long ways to go over here in the Russell 2000, still below the 4.236 over here in the Dow Jones Industrial Average, you've got a little bit of glimmer of hope here with the NASDAQ poking above it right now, which Bitcoin has been incredibly correlated with the NASDAQ over the last several years. Every fall, every rally, every fall, rally, fall, bottom, rally, pause, rally. It's been right with the NASDAQ, but with the Dow Jones still below. And with how compressed this market is into a small percentage of the actual companies in the United States stock market, really, really, really want to see the Russell expand, the breadth open in the markets, and then all breathe a sigh of relief and have a really good time. Fortunately, like you can see it clear as day right here, looks identical to Wyckoff accumulation. You see that on assets like Roblox and on ARK. And so ARK is kind of like one of those good examples because it's an ETF with a basket of a lot of different companies. But due to it being a very select handful of companies that are really propping up the whole stock market, something like this hasn't been running because most stocks aren't going. And so if any of Bitcoin's previous bull runs are to be a guide, things we're definitely looking for to lay down any types of worry would be some type of expansion and opening of breadth over here in the United States stock market. Keeping our eyes over here on gold, because this is not signaling expansion. And then now monitoring all the price levels that we're at with all of these asset market caps as they are at the exact historical levels of where the breakouts took place back in 2020. The last thing I will show before we look at like the big time frame indicators over there, just on the crypto market in general, is that we do know that it's been very correlated to the stock market, not just in current price action of how correlated all these moves have been in here, but like we know, every expansionary period has been the bull runs of Bitcoin and loose financial conditions. The thing that has been loose on the back end has been that reverse repo facility over there at the Fed, where banks have been able to park a lot of money over there in the overnight lending market. We know it topped out at $2.5 trillion back there in December. So once the reverse repo facility opened up and money left the economy to go get parked at the Fed, Bitcoin's peak, as all the indicators show, we're back at that time period when that opened up and money started to flood into it. Then, as money starts to flood out of the reverse repo facility, we see that Bitcoin rallies into that. This thing has drained down significantly. It was at $2.5 trillion at the bottom, and now all the way down to 500 billion. We watched this all throughout the bottom. We saw these correlations happening in here. It was not debatable. We were spicy over here. That was the bottom. The question then also becomes what happens when this thing is drained and this thing is empty, because this correlation has been there at the same time too, right? So it's been kind of like QE happening there without really being QE. Anyway, looking at the monthly indicators on here on Bitcoin, Undoubtedly, strong monthly indicators happening in there, right? Nothing showing up here on the monthly time frame yet. Looking over here on the monthly indicators of the total market cap of crypto, story is the same. Raging stochastic RSI, just in super bullish over here for the relative strength index. MACD curled up. We crossed over several months ago. The story is all the same over here as well for the altcoin market. Looks exactly the same. Raging stochastic RSI, the relative strength index above 60 on the monthly time frame. As we all know, we needed to hold 40 back there in order to remain in a bull market on the relative strength index. The 60 is the bear resistance. It's definitely through it, curled over, all things looking good so far. But where we are right now is really that decision moment of where things got absolutely wild. And it's when we take it off of log scale that you can actually see it. That was the exit. That was also Bitcoin's confirmed break of the all-time high after that as well. So this is where the market catapulted after that. So that's where we are. If you're just looking at indicators on crypto, if you're just looking at price levels of where we're all right at those levels where like breakouts happen. But then when you look over there to the United States stock market and you look to historical behavior of what is the causation and the timing of when those breakouts happen, we know they happen in expansions and the opening of breadth in the United States stock market. In 2013, 2017, and 2021, the breadth opened up very early. The Russell broke out 60 days before the Dow Jones did in 2013, and then it broke out on the exact same day as 2017 and 2021. Right now, it's 80 days behind, and it's only at a 50% retracement level. That's different. It's bizarre. Hopefully, this is a leading indicator for that, but it's something I'm definitely keeping my eye on because this time is different. Either we're leading the market, we're leading the expansion, or the market is telling us there's not expansion. So we'll be watching it daily, understanding we're at a pretty critical level. This is the level of resistance that we are at right now. That was the moment before things broke out in 2020. So I'll be looking for expansion and things to clean themselves up a little bit, because while we really like to attach ourselves to the romantic narrative of the Bitcoin block reward halving, the data shows it to us right here. It has been during expansion in 2021, 2017, and 2013. And fingers crossed, we get it. But we'll watch it every day. So, all right, that's going to be it for this one, guys. I hope you enjoyed seeing how I'm looking at things through my lens. I recognize where we are for the cryptocurrency market. We are literally at that level for all market caps that ended up being that resistance level that led to the big breakouts in 2020. I recognize it. We're there. The timing of it is phenomenal. It's right on schedule, right? But also, I notice all these other things that aren't quite right. And so they've got me wondering, what's going on? Why are these not right? And so you get to see kind of how I see it through my lens. Now, if you enjoyed this content, of course, I write a newsletter over here on blockchainbacker.substack.com. There's a link in the description of this video. This is what the most recent topic was all about this lack of breadth happening in there. There's also case studies in here where I've dove into the performance of different assets. It's one of those reasons why you may hear me say, I don't really care about Bitcoin because I care about percentages. I've cross-checked the entire market. I've come back in 2018 all the way through 2020 and 2021, done all the comparisons on different times, different asset sets, whether you're looking at the top market cap ones, the top 20, or if you're looking at the top 20 by development activity or user activity levels, doing all these cross comparisons in here to show you which segments performed better during the past and why Bitcoin from a percentage standpoint just isn't really that great of a performer. I do recognize some people take that as me taking a shot at it, but it's just data. Again, like I've shown you throughout this whole video, just data. I've done case studies in here where I dive into all that data. You can read it here where I do compare Bitcoin, I compare altcoins, I compare development activity, I compare percentage drawdowns, all that stuff, and how that correlated to returns in 2021. So that's available over here. Of course, you could check out bcbacker.com with over 40 videos and over 11 hours of content on there teaching you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro. There's links down here in the description of this video to bcbacker.com and to blockchainbacker.substack.com. You can also check out xrpgoldcoast2024.com. which is a conference I will be speaking and presenting a lot of the data in regards to this historical behavior, especially when it comes to development activity within the cryptocurrency market. Otherwise, I want to thank you so much for watching, and I hope that you have a wonderful weekend. All right, that's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.